Good morning, everyone. Once again, this is Blackforexgroup coming to you with another pre-market analysis video. This morning, we're going to be looking at the USDCAD, the American dollar, Canadian dollar. But before we get started to break down this Forex pair, we have to state that this video is for educational purposes. This is not financial advice, okay? But we all know why you guys are here, which is to find good, credible Forex content that can improve one's ability as a trader and put some money in your pocket. So with that being said, let's go ahead and break down this currency pair. Okay. Now the USDCAD, as we stated in previous videos, the USD has a dark cloud hanging over it, which is inflation. Now, even though we've been having some good news come out about the USD during this trading week, economic news coming out about the USD during this trading week until the American government starts to institute economic policies to combat inflation. That dark cloud is not going anywhere over there. It's not going away from the American economy. So no matter how good the news is going to be, it is still going to act relatively weak with the periodic strengths of retracement. Okay. Then also we have to discuss that the USD has acted as a non-traditional safe haven currency throughout this European conflict between Russia and Ukraine. So anytime the European conflict was looking like it could spill over to a global conflict, the USD started to pick up strength. Okay. The CAD. Now the CAD has not been one of our stronger currencies, but it has not been one of our weaker ones either. It's had periodic periods of strength and periodic strengths of weakness as well. Now, but one of the things that do affects the Canadian dollar strength and weakness is what the oil prices are doing. So you have to pay attention to the oil prices to get a good evaluation of the CAD. Okay, and we know oil is being affected by global inflation, and also due to the fact that America has banned Russian oil from being basically accepted from everyone around the world, and all the NATO nations that deal with getting 40% of their oil from Russia have stopped getting oil from Russia. So we're going to have to see how that has a ramification effect on the strength or weakness of the Canadian dollar. But for the most part, let's get to the technical analysis. We've been trading in ranges with breaks and ranges looking like we've made new extreme borders, and now we're going down. So previously it looked like every time we were in this area we were going down. We had a break up, but it looks like we established just a new higher consolidation range border, with now every time we get into this area here, we're going down. Okay, and every time we get into this general area here, we're going up. All right. Now the only thing that can change this trajectory of this chart to make it a long position or short position is two things. If the Canadian dollar becomes much more stronger than the USD, then we will see a drastic push down with a slight range once we get to this area down and a continued push down. Okay. Or if the USD becomes much, much weaker than the CAD, then we will also see a drastic push down as well. Okay. The only way we will see a push up, which is it possible? Of course, anything's possible, but not too probable, is if the USD becomes stronger than the CAD, which is not too likely with the inflation hanging over America and how that inflation is basically going to be also catalyzed even further by the ripple effect of the Russian sanctions affecting our dollar. That's not going to be too likely. Okay. Or if the CAD becomes much, much weaker than the USD, then you'll also see a push up. That's also not really too likely too, just due to the fact of how the CAD strength is connected to how well oil is doing, and oil is about to be performing very, very well due to the overall global shortage that's going to be done by the Russian sanctions. Okay, so the more likely scenario is that we're going to have a push down eventually, but for the most part right now, we still may be consolidating between these two price points of 1.288888 and 1.26708. So every time we get in this area, we're going up, and every time we get in this area, we're going down. As I stated in previous videos, I teach people how to trade, but I do not like to trade consolidations. That is due to the fact that if this starts to go down, and we do have that small probability of the fundamental shift that which it can go towards a long position, it will continue to go up. Let's say you're down, here, and you're going into the long position, and we have a fundamental shift in which that price could start going down, and you're in a long position. Then what you're going to start to see is price start to come down very aggressively, and you'll lose your profit. It will hit your stop loss. Okay, so you have to watch out for these things if you're going to be trading consolidations. Okay, hope that information was helpful for you guys. Happy trading.